we have a new edition of 5-Minute Finance. If you've been to the channel before, welcome back. You're probably saying to yourself, Steve, you've got quite a collection of golf polos. Well, yes, I do, and thank you. If this is your first time to the channel, please make sure you like and subscribe below. Today's topic, we're covering life insurance. Why is it so important? We're going to cover the 3 pillars of life insurance: income replacement, large debt payoff and advanced college funding, and finally, retirement planning for surviving spouse. So income replacement. Let's use the example of a dual income household. You have spouse A's income and spouse B's income. As you probably are aware, we spend most of what we make. So we build our lifestyle expenses around the cash flow, around the income we have. Going back to our previous example, spouse A and spouse B, what happens if spouse B's income is no longer there? There's a huge hole there, not only an emotional burden, but a huge financial stressor for the surviving spouse. So what we do is we sit down, we look at, in our example, what proportion of spouse B's income was going towards those lifestyle expenses, and how long does their surviving spouse need it? You may have children that are in their late teens and you may only need it for 5 or so years, or you may have a newborn and you may need it for another 25 years. So that income replacement piece is extremely important, especially for young couples with young children. Our second pillar, large debt payoffs and advanced college funding. When a client sits down with us, after we go through the monthly income and the cash flows, we look at some of the large debts: mortgage, car loans, student loans, credit cards. Part of these life insurance proceeds are going to be used to pay off these large debt balances in one lump sum. It is hugely important for the surviving spouse to be able to get rid of some of these large monthly payments for the large debts. Similarly, advanced college funding works the same way, but in the future. So while we're using the large debt payoff to pay off something today, we're going to set aside a chunk of the life insurance proceeds today for a future education expense. The thought process here is, let's say you have 1 or more young children. Part of the proceeds, we'll use $100,000. Part of the proceeds are going to go into a tax-deferred 529 account for the benefit of the child. And the thought is this is going to grow. It's going to grow to, let's use $200,000 as an example. Now, hopefully, when that child is ready for college, that $200,000 will cover most, if not all, of the education expense. Again, taking a huge burden off of the surviving spouse. They don't have to worry about putting away money into the 529 on a monthly or an annual basis. This advanced funding piece takes care of that. Finally, we have retirement planning. The retirement planning piece is really something to consider for putting away a chunk of the life insurance proceeds for a surviving spouse that may use it down the road in retirement. Whether you are a young couple or if you're in your 50s, this could be an important piece, an added cushion for a surviving spouse. If you're younger, you may not need to use a lot of the proceeds. You can just maybe do a small piece for the surviving spouse. The thought here is they have a lot of time for that money to grow, for them to ultimately use down the road in retirement to supplement some of their income sources. However, let's say you're a couple and you're in your mid-50s or late 50s and one of the spouses has a successful small business, but that's the only income they have, and that is built around all of the expenses that they have. Well, that surviving spouse, God forbid something happens, they've got only 5 or 10 years left to retire, and they're not going to be running the business. So that piece for them is extremely important because it helps them in the upcoming retirement years, again, supplement some of the income. The retirement piece is obviously very, very unique to each client situation, so something that we would go into more detail to consider. That's it for some of the basics. Again, the 3 pillars here of life insurance. If you have some questions for us or on some specific policies or coverage amounts, please feel free to reach out. You can send us an email at the Contact Us link below. Always welcome to leave a comment here as well. Thank you all so much for your time. We look forward to seeing you in our next video.